Hi everyone, this is Alok Patnia, founder and managing partner at Tax Mantra Global. So today in this masterclass, we will be discussing a very important topic, which is demystifying ESOPs. We will go deep and understand the impact of ESOPs, and this is for global founders, and this insight will be for global founders and CFOs. So let me first introduce TMG. So TMG has got 40 plus years of expertise, legacy expertise. We have helped close to 750 businesses who are growth stage, at unicorn stage, and some of them are Fortune 500 companies also. In total, approximately we have helped to create 20 billion plus valuation in the ecosystem. We have close to 150 global experts, and we are present in India, Singapore, US, UK, and UAE. So as you see, we are a global expert, and the top 1% really trust us in the ecosystem, from Swiggy to Razorpay to Truecaller to Open to Nazara. So they trust us because we are a global player. So let me first now go back to the main topic, which is ESOP. ESOP is very important. And in today's startup world, ESOPs are more than a retention tool. They are a culture instrument. होता क्या है कि ESOP इम्प्लीमेंट करने, ESOP जो है ना वो ग्लोबल प्ले है, और ESOP को फाउंडर्स जो हैं बहुत बार उसको रिटेंशन की तरह देखना चाहिए, एंड दे डोंट लुक इट फ्रॉम अ रिटेंशन perspective. So as companies scale, especially across borders, it is impossible to retain top talent purely on cash. खाली सैलरी के बेसिस पे आप टैलेंट को रिटेन नहीं कर सकते हो. टैलेंट को रिटेन करने के लिए यू हैव टू गिव इक्विटी, एंड दैट्स द glue that keeps team together. So in fact, 70% of unicorns today use ESOP as a central part of their compensation strategy. So ESOPs are not a luxury, but it is a necessity. And do you know that startups with active ESOPs see at least 2.5x higher employee retention compared to those without equity incentives? Uh, and at this point of time, let me also talk about the challenges. So ESOPs में कुछ challenges है. Before I hand over to Somik, my colleague, who is part of the leadership and part of he's a team lead, practice lead. So before I hand over, there are some interesting aspects I want to talk about. So why this ESOP masterclass is so important? This ESOP masterclass is very important because the way founders take ESOP, there are few very important things which we need to discuss today. One is, most of the founders in the initial stage, they don't construct the ESOP. They just write on the paper that this is the ESOP I will give the employees. And if they are not registered with ROC and no paperwork is done, then doesn't happen. Plus, and that gets caught in DD. And that is a bigger problem in cross-border, because if you have a global cap table, be in Singapore or in US or in Dubai, and you have Indian employees, it's a bigger problem, because then you need to do a cross-border compliance also. So today we will deep dive and understand the nuances of ESOPs from a global perspective and from a global founder perspective. So over to Somik. Somik, please take us forward and make us understand the nuances of ESOPs.
Right. Thanks, Alok. Before we dwell deep over here, हम लोग पहले समझते हैं कि what are the different type of ESOPs. सब हम लोग तो ट्रेडिशनल लिस्टेड कंपनी सोच के ही आगे निकलते हैं कि ESOP मिल जाएगा, लिस्ट हो जाएगा, and then we will sell it in traditional sort of stock market stuff, which is a general ESOP plan. So if you see in point 1, ESOP general ESOP plan बोलता है कि you get an option to buy at a predetermined price, which is much lesser than the market rate, and you can sell it after a point of time to the system at large in traditional ESOP, right? So that is point 1. But nowadays there are two important stuff over here. One is RSUs and one is phantom stocks. Phantom stocks are now becoming very common. What happens in phantom stock is that the company doesn't offer you physical shares. What they do is that they give you some options, and the options, it requires those options to be appreciated after a point of time or after a particular event, and the value of appreciation is then get monetarily compensated. So say for example, मेरे को अगर RSU मिला, the RSUs will come at say 10 rupees per share जब मेरे को मिला था, and after 3 years the company grows and the company will then become 300 rupees per share. So 300 minus 10, 219 into the number of phantom stocks that we receive is something that will be monetarily compensated, and it will add to my perquisites, right? And RSU is something is not time based. RSU is where there are when you meet the condition, then you get this RSUs. Now, next come to sweat equity. Sweat equity is something that you get through advisors. You're consultant. You work and hence you contribute to the growth of the company, and hence you get it to contributors and promoters. Now, it very well depend on what type of structure you have, because only then you can finalize the right form of ESOPs that you should give to your employees. Now let's understand this in two different aspects, right? Now one aspect is the India centric aspect, one aspect is Singapore centric aspect, one aspect is US centric aspect. Now many of our clients, and this webinar is specially designed for companies with cross border angles. So say for example, you have a holdco in Singapore, right, and you have subsidiaries and employees in US and India, right? Now how to structure it, because in India you have Companies Act and SEBI for listed companies, and then you have RBI for any companies, right? Be it if you have a holdco in Singapore, if you or you have a holdco in India and giving ESOPs to foreign employees, right? Again, in Singapore, there are IRS norms, and there are 13 UV conditions that you have to dwell deep. I will not go in the technicalities of 13 UV or 409A because it needs a separate webinar only for that. But just to give some clarity, it requires this regulation to be taken. Until that happens, then be it in Singapore or in US, you have to have a deep trouble. So if you issuing any ESOPs from Singapore or US, or your employees are in Singapore or US, you might have to look into this regulations, and these are cross-border regulations, and hence your ESOP plan should be holistic enough to cover all these regulations at NNB in sync. So in India, right, if you have to issue ESOPs, because many of our many of our clients have a subsidiary of their Singapore entity or subsidiary of their US entity, right? Now you have to get first the board approval and shareholders approval. So the law over here in India says that when you offer ESOP of your holding company to your Indian employees, right, then you have to go for RBI compliance, and this RBI compliance has to be done every 6 months. Point one, the employees has to do it as well as the subsidiary entity. Point two, point three, and this is very important, the RBI laws categorically says that until and unless you are a full-time employee, you cannot get a ESOP. So basically the law says until and unless you are a resident employee, a resident Indian being an employee of the subsidiary of your foreign entity, a full-time employee, you cannot get ESOP. So this is very important. So many of our clients come to us saying, I have Indian employee of my US holdco. Can we give them ESOPs? I said completely fine. But then
Soumya,
when they say,
Soumik, this is so important that I want to stress this point once more.
mm-hmm,
And thanks for bringing this up. And yesterday only, I was talking to a client and they had still not formulated the holding subsidiary relationship.
mm-hmm,
And they are almost at Series A. And now the investor is saying that please within the DD you please formulate the ESOP, issue the ESOP, and then only I will move ahead and start the DD. This has become a big problem. So this is to all the startups, all the business owners who have a global structure, who have a cap table which is outside India, and just because you are worried of transfer pricing or some other law, and you feel that holding subsidiary relationship can be done and can be structured later, don't do that, because if you do that, you will not be able to issue ESOP to your employees in India. And this is a big roadblock. Even today, I was in a webinar in a conference and I was talking about it. Someone told me that we have two companies, one in US, one in India, and we still don't have holding subsidiary relationship, because we don't know ultimately which company will unlock the value, but we want to give ESOPs to employees. I think that's not possible legally. Very important. So thanks, Somik, for bringing this up. And I think this is something which needs to be brought in and talked about in detail later also.
Right. Thanks, Alok. Absolutely. Please understand, until you are a full-time employee of the subsidiary entity, you cannot give it. You cannot offer them ESOPs if it's in contractual basis. If it's not a part of, so what happens is that, say for example, you have a holding entity in Singapore, right? And you have an employee here in India who is virtually on contract, right? You cannot get the shares until and unless the the Singapore entity is a listed entity. So these are something on structural level you need to work upon. And this brings me to the myth, the very common myth that we often get. Alok has already said one, because founders keep on saying, let us first do Series A and then go ahead with ESOP. Now the problem over here is many investors will say, I will only invest when there is ESOPs. Without that, we will not invest. So it's very important to do it before pre-seed or at a seed stage, before your first round of investment. And this is also important because then we will have equal amount of dilution. If you delay it, the dilution is lost, and then again there are a lot of investors coming in saying that I will not allow that to happen. So this is point one. And again, there is one more thing that people think ESOPs only dilute the founders. It doesn't. It dilutes everyone. So you need to understand that, and you have to structure it somewhere. But however, as I said in the initial slide, there are ESOPs similar to phantom stocks. In phantom stocks, there is no dilution whatsoever, neither to the investors or to the founders. So one might plan to do it phantom stocks, but again, that has to be structured in a way that it helps and to create a win-win solution from the tax point of view. And hence, you can reach out to us and we can design it accordingly. Now, again, a very common factor and perspective is that once you go for ESOPs, people think that it's only for bigger companies. The answer to that is no. Even a 5% startup with two founders and three employees can go for ESOPs. There is no certainty for only for big companies. ESOPs can be for all. In fact, if you think, and there's an important perspective from CB Insights, which says that over 80% of Series A and later stage investors consider ESOP structure and capital hygiene as a part of due diligence process. So before Series A, that is in pre-seed or seed, you have to do ESOP until otherwise their due diligence might come as a problem, right? So on a broad basis, ESOP have to be done. It has to be done on parent or subsidiary sort of way. It has to have a parent subsidiary structure. In the parent subsidiary structure, you can have a holding company and giving ESOPs to the subsidiary, or you can have a trust route, that is you create a trust and then issue it. And it completely depends on the type of cap table complexities you want to have. There are complexities in trust, there are complexities in parent and subsidiary, and it is very important to assess and then trigger. Now, a common question again is the valuation in regards to global startup. Uh, the global startup have a 409A in US. The Singapore uses IRS fair value principle, and India uses a 100 UA valuation principle. So your startup program should be in sync with all the three, so that it's completely in sync with the standard altogether. Now, one a very common question that in traditional startups, when does ESOP gets triggered? The ESOP is usually gets triggered as a part of when you exercise it. What does this mean? It basically means that when you purchase the shares, right? When you say, right, I am supposed to get at 1 rupee, give me at 1 rupee, though the fair market value is say 500 rupee. Now that 499 is taxable as perquisites, and during the sale of that shares, when you're selling it for say 1,000 rupees, right, it's 1,000 minus 499, for 1,000 minus 500, that is taxed again as capital gain. So you need to plan, as I said, accordingly over here. A very simple checklist for ESOP would be, you create the valuation report, you have a ESOP register, you track what are the tax withholding over here, and you make sure that in cross-border angle you do the proper reporting. Now, why tax withholding is important is because in India the law says that when you pay a perquisite, right, it has to have some withholding tax. We can have a one-to-one discussion, but that has to be planned, because until and unless you do that, and that can be deferred till 5 years. Make no mistake, if you're a startup India registered company. But if you do that, then you can defer it, but it has to have withholding tax component over here. So you need to sit with a global firm like us, that so as to plan your ESOP accordingly. Um, Here Alok gave us a example that he recently did it, and this of course is a fintech startup that we dwelt very recently over there, right? The fintech startup had raised 10 million at $100 million valuation, and it had offices in Singapore, Dubai, and India. They Before they started the structure, right, they came up to us, and from before seat, right, um, we tried to have this process inbuilt for an ESOP, but be that as it may, they had a full ESOP plan. They revisited the ESOP plan afterwards, and then they finalized the ESOP accordingly. They had a 10% ESOP pool, and it would have be directly issued from Singapore, because they didn't want it to go for the trust route. We told them not to go, because that would create a long-term problem from the FEMA perspective. Then we created it, the fair market value regulation. We make sure that the regulation is in sync. How should we create the fair market value? And we design such a way that the tax impact is less. And lastly, what we did was we had a performance multiplier. So say, for example, if someone is doing well, we made sure that to the Singapore HQ, we give them 25% extra vesting. I mean, we give them, say, if someone would have been gone 100 ESOPs, they would have received 125 if their performance match. So this sort of things can be added in the ESOP program. This helps employees to get further motivated and put hard work, so that your company grows, and you can get the betterment and enrichment from the employees altogether. So just to finalize and conclude, and I would ask Alok to summarize in totality, and just for everyone, we have a categorical question and answer session which we can do a one-to-one basis. And just think about it. ESOP is not just a compliance burden. It's very important that you think it as a value creation tool so that you can benefit in long term aspect. Alok?
Thanks, Somek. And if you can just go back to a couple of slides, I just want to talk about uh, the next slide. Just prior to this slide. Yeah. So, Somik said something which was so powerful. He said that more than 80% of Series A start founders, more than 80% of investors at Series A level and at later stage investors now consider ESOP structure and cap table hygiene as part of due diligence. And this is as per CB Insights 2023. Guys, this is exactly I was talking to in a conference today, and someone asked me that what is the top one thing which investors these days look into, and I said clean cap table and well structured ESOP. If you do not have a clean cap table and if you do not have well structured ESOP, the due diligence will fall on its face on day one. And this is super, super important. And one more thing, and I'm telling you this with utmost care, that today ESOP is not an option, it has become necessity for all the startups, because you need quality resource at the initial stage and you cannot have resource only through cash salary. And founders have to stop looking at ESOP as a structure tool or a compliance tool, but as a investment and as a retention tool, right? So with this, I think, and it's a very complete, comprehensive gamut. So we want to, if you want, we can do a one-to-one call with you, which is a non-obligatory call. We can discuss about your requirement, about your ESOPs, and we can formulate something for you. So if you need that support, you do write an email to team@tmghq.com, and we will move further and help you in this. So I mean, just go back once. Yeah, just go to our contact us slide. So you can also get in touch with us on our mobile number, on our email. We will put the content on as a comment when we upload this video on YouTube. Just go to the myth wala slide once more. And so this is so important, and I wanted to have this myth one to discuss this myth once again. And so this is it, guys, and thanks for joining in today. Somik, you can unshare this now. And thanks for joining in today. And we are doing weekly masterclass on important topics for hyper growth founders and businesses in India, Singapore, US, UK, and Dubai. So we will continue to do that. Watch out the section on LinkedIn, our LinkedIn page of TMG, to get more information on this. And thanks for joining in today. I hope it was very insightful. And thanks, Somik, for helping us to deep dive into ESOP compliances. Thank you, everyone.
Thank you, everyone. Bye bye.